Aren't you excited? You just learned something. Okay, turn the page. You should be excited. You just learned something. I mean, you're getting your money's worth. Katie, Chanel, how are you? I'm fine. What was our definition of accounting again? Information. So first, we're going to start out with management accounting information. Okay. What is accounting? And actually, there's some. Given my definition, that's actually a little redundant, isn't it? Accounting information, same difference according using my definitions. ECTA. What is accounting, or what is accounting used for? Should be just on the prior page in your notes. What is accounting used for? Because what's accounting used for? Making decisions. So decision making. So we're going to place here a management decision. Okay? Then what happens? If you make a decision, what happens? Davis? Mittelhauser. What happens then? Did I say it right? Yeah. I mean, it's kind of it's a good German name. What happens then? You make a decision, then what? You act on the decision? Yeah, stuff happens. You act on the decision and stuff happens. The fancy thing I'm going to put on the board are economic events occur. An economic event occurs, or events. Okay, an economic event or events occurs. At one time in my life, I mean, those songs that are on iTunes that I told you about a little earlier, I have CDs with my picture on the inside, with my name on the front, that contain all of those songs. So at one point in time in my life, I purchased little over 1,000 CDs with my name on the front. I made a decision to do that, right? I made a decision that, I thought, I could get my money back out of that. I made a decision, buy CDs. What happened? Well, first off, I was poorer, right? I had less money in my bank account. Why? Because I had to pay for those CDs, because I purchased them my own self. And then what then happened? What was the benefit? So that was the cost. I spent money. What was the benefit?
An economic return or loss.
Well, in the short term, immediate term, it was I got CDs that showed up, right? So the immediate economic event was I spent money, 5 boxes were deposited in my front doorstep on a day when I wasn't there. And so they stood on my front doorstep for over 24 hours before I arrived home to actually place them inside. Whew. I was not really happy on that particular day. But, so that was the economic transaction, and then you're kind of jumping into the future a little farther in terms of, how many have I sold and what kind of return have I gotten and that sort of stuff. But the immediate effect of the decision was less wealth, more inventory, okay? And both of those things are measurable using accounting information. So the outcome of this then is additional accounting information. And then we have a circle. And that accounting information feeds into our just bigger ball of accounting information that we have to use to make decisions, okay? What was the topic of your last class? Most of you have just taken one accounting class. What was the topic of that accounting class? Financial accounting. Financial accounting, it's good to know that you remember at least a little bit about what you used to know. Financial accounting is primarily a post-economic event activity, right? The financial reports are created after the end of the year, summarizing the activity that happened for the past year. So it's a post-economic event activity. For those of you who are accounting majors, you're going to get to take some tax classes. It is also, tax is primarily a post-economic event activity. You know, there is certainly tax planning that occurs. There's certainly financial planning that occurs within organizations. But they're primarily post-economic event activities. And finally, audit. What do auditors audit? Anyone? The accounting information contained in the financial statements. Does anybody audit tax information, tax returns? IRS. So auditors are auditing these prior two categories.